Hi, welcome to yet another series under the webinar series of Get More from Mallapuram. And we thank you all for being part of this webinar series. And today, even before we get into the webinar, let me just tell you a little brief about the reason why we have been trying to do this particular webinar series. Okay, the only purpose of actually doing this webinar series is only to provide clarity such that whatever the policies that you people are purchasing from any of the insurance companies, you need to have confidence in what are the policies that you're purchased or planning to purchase. So this is the reason for which we are running this bi-monthly webinar series. And even before we get into the topic, let me also just give you a little brief on the reason why we are doing it and the declarations before we proceed further. We do not represent any insurance company in this particular webinar series. Get more from Mallapuram. Okay, we don't intend to represent any insurance company over here. And at the same time, the issues what we'll be discussing here will be absolutely only insurance related. No movies, no politics, nothing. It's just purely insurance. Okay, and at the same time, we don't intend to criticize any particular insurance company or a product of any insurance company. We don't intend to do that, but by chance, if it happens, it is only by chance and it is never planned to do it. And whatever the points that we discuss under this webinar series, it's absolutely personal and cannot be taken it as an evidence under any court of law. So with these declarations, let me just now get into the topic of the day. And the topic for today's webinar series is the MSME fire insurance. The MSME, that is the micro and small and medium entrepreneurs, right? The companies, MSME companies, for which there is a standard fire insurance policy which have been given and which is actually now effective since 1st of April 2021. Okay, so what are those IRDA guidelines which got changed for the benefit of MSME companies? Okay, so this is the topic of the day, and this is the latest thing which has happened in the general insurance industry. So let's get into the details. And when we actually look into the entire episode of doing this thing, we'll be actually looking into the agenda here. First, we will be doing a situation analysis. Once we do the situation analysis, that's when we'll be getting into an clarity for confidence session, wherein at length detailed discussion of whatever the changes which happened under the IRDA guidelines which are given for the standard fire insurance products for the MSME segment will be discussed. Okay, and in this episode, in this webinar series, we'll be only touching upon the basic changes which happened in the policy, the structure and the coverages. In the next episode, we'll be actually looking at into how that is going to impact in the claims condition. Okay, so what is that? What is the new thing which IRDA has actually implemented to make sure that all the MSME companies will get the best out of these standard fire insurance policies? Okay, and we from this webinar, we would love to acknowledge and thank IRDA, wherein they have actually detailed out so very well, and they want to provide the best coverages with the best premium for all insurance for all the MSME companies. So we thank once again IRDA for actually helping out the MSME companies. Okay, and then we'll also look into the review points, and then we'll also look into the action points which need to be done after this entire webinar. By the end of this webinar, you will be in a position to actually understand what are the coverages which are there and to what extent we need to we'll be getting the coverage which are actually inbuilt into the standard fire policy. At the same time, what are the few optional benefits? It's only a couple of optional benefits which are there. So what are the optional benefits which can still be taken, and And at the end, we will also see what is the additional benefits that we are going to get out of these standard policies. Okay, so with this, let us now enter into our the situation analysis. Whenever we look into the policies, like now, especially the company insurance policies, the first person who actually asks for it is when you go for the bank, when you go for the loan to any of the bank, right? Am I right? Okay. So the banker is the one who will first ask for this policy. Okay, this is the first person, and we also thank all the bank managers and the banks people who actually enforce the people to the company owners to have their fire policy in place. Okay, so this is something which is really good, and we thank them for actually initiating this process. So they are the first people who actually push the company owners to have a fire policy in place. Okay, next, if you are actually looking for any new investors who are coming in, and wherein you the investor will always look for the safety of his investment. So at that junction, they do ask for a fire policy which need to be there for the entire organization. Okay, so that's the second situation wherein we think of having fire policy. Okay, the third situation is wherever like the company owner wants to go for the policy, they want to pay very less premium, but for a more coverage. Okay, so and to have more coverage, normally what they think, the claim might not come up completely from the insurance company. So generally what we have seen, people try to exaggerate the claim. This is what we have actually seen. So all these things are happening because they're not clear of what are the coverages which are there, what are the add-on things which are there, and how much to what extent do we need to take that particular coverage. So there is no clarity for that. So this is the situation where we are in, and there was a detailed study on this from the committee from IRDA, and they have actually stipulated the norms of coming out with, especially for the micro and then the small and medium enterprises, that is micro enterprises from less than 5 crores of coverage, and small and medium enterprises wherein the coverage, the value of the company is from 5 crores to 50 crores. So this is the segment. So IRDA has actually come out with a situation with the standard products wherein many of these facilities, many of the coverages, and there are some pitfalls of having the under insurance, and also even the escalation of the value of the company. So all these things have been taken care. You will have a very clear cut clarity by the end of this session on what are the benefits, what are the inbuilt benefits which have been designed by IRDA, and what are the few add-on covers, and how is this going to impact the overall coverage of the MSME segment under this policy. Okay, so the standard policies which we which was there, and this was actually the circular was released on 4th of January 2021, wherein the IRDA state said that all these conditions, the standard fire policy will be implemented from 1st of April 2021, and all the people who are all there, all the insurance companies are mandated to actually give this particular product without any changes in the coverages. Without any changes in the coverages, number one. Second thing, if they want to add up, they can actually add up little more add-on covers, but maximum it is allowed is only 5 more add-on covers which can do while filing the product. And if they want to do even more, that is possible only on the second filing of the product. I think that is somewhere after September is what IRDA has allowed the insurance companies to do it. Okay, so this is the new guideline which has come from IRDA, right? And wherein the standard fire policy has been designed for dwellings, the micro enterprises, the small and micro enterprises. So this is the thing which we'll be dealing in depth in this particular webinar. Okay, and till this point, if everything is fine and your yes, shall we actually get into the detailed analysis? If yes, please type in yes in the chat box. Oh, okay, okay. Thank you. thanks a lot for participating and engaging in this particular webinar. And this is where we want to give the more value for whatever the time that you spend on this webinar. Thanks a lot. Thanks a lot for joining us on this webinar. Get more from Mallapuram. Okay, so coming to the main topic, that is creating the clarity for confidence. So this is where we actually do the entire discussion. Okay, so number one, so what are these standard products? Okay, there are three standard products which have been designed and mandated by IRDA to be there with all the insurance companies. Okay, and if you actually look into that, the first one is called Bharat Griha Raksha. Okay, so this is actually for the dwellings. Dwellings means the individual house owners. It is for the residential properties. Okay? It is only for the residential properties. Okay. Then the next one is Bharat Sookshma Udyam Suraksha. This is for the small enterprises. Okay, the small enterprises. And then we have Bharat Laghu Udyam Suraksha. Okay, Bharat Laghu Udyam Suraksha. This is for the small and medium enterprises. This is for the medium enterprises, and Sookshma is for the small enterprises. Okay, so this is specifically for the MSME segment. Okay, and the dwellings. But in this webinar series, we'll be only focusing on the Bharat Sookshma Udyog Suraksha and Bharat Laghu Udyam Suraksha. Okay, so it's a small and micro medium enterprises is what we'll be looking at under this webinar, and we'll be dealing with the Griha Raksha standard product under another webinar series. Okay, right, another episode. So let us now go a little deep into this particular product. Okay, so Bharat Sookshma Udyam Suraksha is for those enterprises wherein the sum assured is up to 5 crores. That means the total value of the organization for which we are trying to take the fire policy is up to 5 crores. Okay, so 5 crores comes under Sookshma Udyam Suraksha, and then from 5 crores till 50 crores, it comes under Laghu Udyam Suraksha. Okay, Laghu Udyam Suraksha, right? So Sookshma is actually, that is small enterprises up to 5 crores, and then medium enterprises from 5 crores to 50 crores. Is this clear? Right? If it is clear, just put in yes in the chat box. Okay, okay, thank you. Thanks a lot for participating in this webinar series, right? Okay, so what are the occupancies? What are the occupancies which are covered under these standard products? So what are the businesses who can actually take these standard products under the standard fire insurance products, that is Sookshma and Laghu Udyam Suraksha policies? Okay, if you look into that, we have got the office spaces which are there, right? And then the hotels which can actually take these policies, and then we have shops, the individual shops which are there. Even those people, they can actually take these policies. And then the industrial or manufacturing risk can also be covered under this policy, right? And at the same time, utilities which are not within the manufacturing setup, wherein it is outside the manufacturing setup, like it could be a storage, it could be a godown. Now, these things which are outside the compound wall of the manufacturing or the industry, even those things can actually be covered under this policy. Okay. At the same time, the occupancies which are covered, which are also even the storage risk, the godowns which are out there, and then at the same time the tanks and the gas storage areas. Like these are the places wherein even the petrol bunks are there, or the gas cylinders company wherein they store all the LPG gas for the use of domestic or even for the industrial usage. Okay, so these are the segment of companies. If the movie theaters, or the offices, the office spaces, the labs, all those things, the only condition is the sum assured should not be more than 50 crores. So any sum assured, any value of the total plant, building, machinery, stock, all the things together should not exceed 50 crores. So that is the only condition which has been levied. I hope this is clear. right? So occupancies which are covered are, you can see this, right? The offices, the hotels, the shops, the industries, right? And also even the storage and even the gas tanks, the gas storage areas, right? Is this fine? Right. Now let's look at who are the people who can actually take these policies. Okay, many of the times we have actually seen people who always come up and say, see, we are actually we don't own the entire property. We don't own the property, but at the same time, we also use the machinery out there, or we have actually put up our own machinery into this rented premises, and we actually do the if say anything happens, like no, we are the people who are responsible for the entire property. Okay, though we have actually taken it on rent, but still the ownership, the complete responsibility actually lies on us. Okay, so in these situations, if you look at like now who can actually take the policy, the people, the people who are one second, just hold on. Yeah. So the people who are there, like who own it. Okay. So you own it. So you are the occupancy under the lease. So you actually take it, right? And you occupy it as a purchaser under an agreement. Like you are about to purchase a particular property, and now you want to actually cover the particular asset. You can still take the policy. Okay, probably you have just done the agreement. Probably the final payments are due. Still, you can actually go and have the coverage in place because you are about to own the policy, own the asset, right? And you are the occupier who are authorized under any law. Like you have actually rented the premises, or probably somebody has given the power of attorney to use that particular asset for your regular routine of business to be conducted. Even then, you are eligible to take that particular fire policy on that particular asset. Okay. And at the same time, your property is occupied by a tenant. You are the owner, and there's a tenant out there. Still, you can actually take the policy on your asset. Okay. Or it could be even the other way around. The tenant himself actually can take the policy on the entire property. Okay. Because anything happens to the property, the repairing onus is actually on the tenant. So he can also take the ownership, he can also take the standard fire policy on the property. Okay. So these are the 5 situations under which a person or an organization can take the standard fire policy on the asset, on the risk which is actually under insurance. So we can actually take that insurance. Okay. So with that, we'll also come now on the challenges which are out there. Okay. Once we look into the challenges, see the most important challenge which we have ever seen under any of these fire insurance policies are declaration of value of your assets. Okay. So your value of your assets declaration is the major problematic condition. Okay. Why do you think so? Let's take an example. I think we have also done a similar example in our previous episode, but I thought it will be a little more easy for all of us to understand it. Okay. Now let me just take you through a case study. Okay. How does this is going to impact? See, normally what we do is we actually take the balance sheet values while we are declaring the value of particular asset. Okay. And considering the depreciated values, here, so what happens like now, we normally go for the market value. We don't look into the reinstatement or replacement value. We always go for the market values because that's how the balance sheet is being, the balance sheet values are there. Okay. And the impact is there is a lot of underinsurance which is possible, and how the underinsurance impacts on the claim of the policy, if there were to be any claim under the policy. Okay, let's take a case study. Okay, there's a plastic manufacturing company which is a 30-year-old company, and there is a new buyer who actually bought that particular asset, and for 20 crores. 20 crores, out of which 15 crores is the entire and he insured the 20 crore property for a 15 crore value, because 5 crores is the land value. So for the land there is no insurance coverage which can be given. Okay. So the land value is 5 crore, and there is a surrounded boundary wall, and the replacement value if at all this entire organization need to be reconstructed again, the replacement value, if you actually look at, that is actually coming to around 100 crores under this particular example over here. Okay, so if there is any claim, right, and the unfortunate event of fire accident happens, and there's a loss of, say, suppose around 2 crores. Okay, how does this going to impact the claim? Okay, so the unfortunate accident happens, then because the total value is 20 crores and the land value is 5 crores, the market value other than the land is 15 crores, and he insured up to 15 crores. So that's the declared value under the policy, right? And the replacement value is 100 crores to build the entire organization with the new equipment, new building, everything. That's 100 crores. Okay. Now, what happens if there is a claim? So there is an 85% under insurance under this policy. I hope this is clear, right? So they insured only 15 crores for 100 crores. That means 85% is under insurance. And how is it going to affect the claim processing? See, the payable amount is only 15 crores, which comes up, that is coming to 37 lakhs 50,000 in this particular case. Now, how does this calculation happens? There is a 2 crore of loss, and the reinstatement cost is 2 crores 75 lakhs. 75 lakhs has actually got increased. The estimated loss was only 2 crores, but 75 lakhs got increased up, right? So deduction of excess under the policy is 5 crores, 5 lakhs, and then the deduction of the salvage, the whatever the salvage value which was left out after all the repairing is say around 20 lakhs in this. So they have the normal condition, this 25 lakhs need to be removed, and 2 crores 50 lakhs need to be paid. This under normal circumstances. But because there is an underinsurance of 85%, so the underinsurance deduction which happened under this policy was 2 crores 12 lakhs 50,000 rupees. Okay, got it? So this is how the major impact of underinsurance which happens, right? Now, with this, so the payable claim has become only 15%. That is 37 lakhs 50,000 got paid. Now, let me just share you the good news. The good news is now for the MSME segment under the Bharat Sookshma and Laghu Udyam Suraksha policy, which has been designed by IRDA, the underinsurance is now normally it's underinsurance is like a self-assurance, right? So this has been now removed. So kudos to IRDA. This is a major change which has actually happened under this new guidelines which have been issued by IRDA. We want to really kudos to IRDA. We want to really thank IRDA for actually safeguarding the entire MSME segment, and which stands to be the backbone for the complete Indian economy in this current scenario, right? So the underinsurance has been completely removed by the guidelines which have been given by IRD. This is the best thing which would have ever happened in the entire history of insurance, and we thank IRDA for doing it. Okay, and with this let me just go through. So how does anyone come to the valuation or arrive at the value of the organization? And this has been detailed out by the IRDA, right? And so this is how it should be. So the building of your organization, it should be always be on a restatement or replacement cost basis, not as a current market value basis. I'll tell you why. See, if you look into the current situation, wherein the value of the building of the company, whether it's in a manufacturing setup or an office setup, the value of construction is actually increasing at the rate of 7% according to the RBI index on yearly basis, 7% per annum. So say suppose you have constructed a building, say 5 years before, and now you have to construct the same building with the cost what you have incurred 5 years back. You cannot construct the same building once again, right? because the value got increased. Of course, the land value is any which way it is increasing, but the construction price has also got increased. So this increase of construction, which need to be inbuilt into your policy, and that is the reason the value of the building under your standard fire insurance policy should be on a reinstatement basis or a replacement value basis. Okay. If you go for the market value basis, then it is not correct. So this has been clearly detailed out by IRDA, and you can actually see it in the basis of valuation which have been defined by IRDA under their Bharat, Sookshma and Laghu, Udyam, Suraksha policies. These are the standard fire insurance policies for MSME segment. This is the way how the valuation has to happen. The buildings, the furniture and fixtures, the plant and machinery, all the three things, the major three things, buildings, furniture and fixtures, plant and machinery should be always on a market, should be always on a reinstatement value basis or replacement value basis, but not as a market value basis. Okay, there is actually a request over here. Fine. I'll just repeat it once again. Okay. Based on the current guidelines which have been issued by IRDA under their Bharat, Sookshma and Laghu, Udyam, Suraksha policies, the standard fire insurance policies, the building, the furnitures and fixtures and plant and machinery need to be valued as replacement value or reinstatement value basis, but not as a market value basis. Okay, is this clear? Is this clear? Right? Okay, but when it comes to stock could be like the raw material or the goods in processing, the stock in process thing, or it could be also a finished good, or it could be a finished good which is already been sold but still yet to be moved to the client place. Okay, these are the four different situations which will be there. So in those situations for the stock, how the valuation need to be happen? For the raw material, it is the landing cost which includes the cost of your raw material, the transportation cost, the labor cost to unload and put it into your godown, right? So this is the landing cost. Okay, so all your raw material will be valued under as a landing cost, and the stocking process, because there will be a little bit of process which would have actually happened. So the total input cost will be taken as a value for your stocking process. So if there is any loss, the loss will be calculated as stock in for the stocking process as the input cost, the total input cost, which also include your employees salary, your capitalization cost, everything will come into the place. Okay, then for the valuation of your finished goods or the finished products, it is based on your manufacturing cost. The entire manufacturing cost will be the basis of valuation. And at the same time, you have already sold the product, but still the material has not gone to the client. It is still there under your godown. So that kind of material which is already goods sold but not delivered, those things will be as per the contracted value. Okay, it's per the contracted price, for the price at which you have agreed to deliver it to the your client. Okay, this forms the basis of valuation and coming to the sum assured under this Bharat, Sookshma, Laghu, Udyam, Suraksha policies. These are the standard fire insurance products which have been levied by the IRDA. Okay, and coming to the next one, that is the value of the policies, again continued. So there are a few things like the curious are the rare things which are there in the in the marketplace, are the most important kind of things, the curious, and then the work of art. There is an art which is out there, and even the manuscripts, the old manuscripts which are out there, which are of most important, and also even sometimes the obsolete machinery. It used to work, but now currently it is completely obsolete. Okay, so these are the things. The policy can be issued as a value policies. It's a valued policies, and to actually deliver this, we need to have an valuation certificate from a certified valuer. Only based on the valuation certificate, the policy can be issued. So even those things are possible under the this Bharat Sookshma and Laghu Udyam Suraksha policies. Okay. Coming to what are the things which are not possible, things which are not possible under the policy. Okay, the partial insurance, like you have the entire company, power the value is actually going beyond 50 crores, so you want to only cover one part of the entire company. That is not possible. Okay, and you want to split the policies and take the policies because you got a better rate under the MSME segment, and you want to have two different policies for the same location. Not possible. So these are the two situations wherein you cannot split, nor you can just do partial insurance under the policy. Otherwise, the complete policy is void ab initio. There is no policy or no coverage for the entire organization. So never do such mistakes, right? Okay. And what are the built-in covers which are there? The additions normally, if you look into the coverages under the standard fire policy, the add-on covers whatever are there need to be taken as an add-on cover by paying the additional premium. But coming to this Bharat Sookshma Laghu Udyam Suraksha policies, that's the MSME policies, the standard fire policy designed by IRDA. Many of these add-on covers have been completely inbuilt into the policy. It's been already been inbuilt into the policy. Okay, so let us actually go back and see what are the add-on covers which have been already inbuilt into the policy. Let me just check the first one. The first one is the additions or the alterations or the extensions which can happen into your business over a period of 1 year. Maximum up to 15% additions is given as free of coverage. There is no additional cost which need to be paid to the insurance company. In a normal way, we have to pay some additional premium, but here for MSME segment, it has been waived off. So up to 15%, it is inbuilt into the policy. That means you have taken a 50 crore coverage. Now 15% on 15 crore is another 7.5 crore additions you have done to the capital assets or to any alterations or extensions which happen to your company. Those things are taken care by, no need to pay any additional premium for that. Okay, that's the best part. Okay, and then if there is a temporary removal of your stocks and that need to be placed somewhere else, up to 10% of the total value of the stock can be under the removal of stock, temporary removal into some other place, some shifting is happening. So those things are also covered, and if there is any accident happens at that point in time, any fire accident, it is still covered up to 10% of the total value. Okay, this is another good news. And the cover for specific contents. Specific contents is this something which is really good because your money is covered in that, right? And then your documents, your accounting books, your manuscripts, or your agreements which are there, all those things are also covered. And at the same time, your computers, your data, your programs, along with that, even the personal contents per person is also covered under these policies. Okay, if you actually look at this, money is up to 50,000, and then documents up to 50,000 rupees, and even the computer programs and other stuff, those things are covered up to 5 lakhs, and per person contents up to 15,000 rupees per person, maximum to 20 people is covered by default. Okay, now let me just tell you one more thing. See, generally what happens if there is a claim which happens because your complete doors are opened up, your contents are inside there is no security out there after the accident. If it happens, there's a huge chances, there's a high chances of people coming in and thefting the material which is out there. Okay, so those kind of thefts, or even if it is a burglary which happened, those things are also covered under the policy by default. So what are the theft or the burglary happens after 7 days, within 7 days after the fire accident, even those things are also covered under this policy. Okay, So if there is an accident which happens, there is a startup expenses up to 5 lakhs is also being given by default under the policy. A professional fees which need to be paid for again building up the organization, up to 5% of the claim is inbuilt. And the debris, the lot of debris which actually gets accumulated if there is a fire policy, there's a black dust which actually gets formulated, right? So all that cleaning up to 2% of the claim amount is free of cost. Okay, and cost if need to be paid to the municipality for getting the for reconstructing the entire organization, the entire company, the manufacturing unit, it is paid on actuals. And the floater coverage of stocks is it's actually not available in Udyam, that is Laghu Udyam Suraksha, that is a medium entrepreneur. But in a small segment entrepreneur, yes, it is covered. But in a medium segment, it is actually not covered. Even goods held in trust is also being covered under these policies. Only the floater cover of stocks is not possible under the medium enterprises, that is the Laghu Udyam policy. Okay, and if you have any doubts on this, if you have any doubts on this, and you want us to review our existing policy or help you in getting the right thing, we are always there. Okay, all that what you need to do is just take a photo snap of this QR code which is out there, and then you can also even type this short URL. You will have a form wherein just key in the details. Me and my team will be always there to help you out in getting the best coverage for your company. Okay, and then so protect your business. And what are the steps that we need to do, the action points? This is the main thing. Okay, first thing is check your existing policy benefits, review with your advisor, call your advisor, talk to him once, call him for a breakfast or for a lunch, then talk and review with your advisor who's actually giving you the policies. Discuss with your safety manager, is there anything else that need to be taken care, right? And then get the required endorsements done in your existing policy. Okay, once you do the endorsement, if there is any if there's any gap, so let's do the endorsement. Probably even if requires to pay some additional premium, let's pay it and get the coverage in place. Okay, right? And by doing so, if you need any help, in doing that, we are always there. So just take this snapshot of this QR code, and then there will be a form which will be out there where you just need to fill up the details. Me and my team, we are always there to help you. Okay, and with that we are actually coming to the end of this today's webinar series. The today's topic, that is MSME fire insurance, the new IRDA guidelines. Okay, and thanks for coming on to this webinar series, that is Get More from Mallapuram. The purpose of this webinar series is only to provide clarity such that you will have confidence in what are the policies that you already have or what are the policies that you're planning to purchase. Okay, next episode we are going to focus on these changes which has actually happened on MSME, how it is going to impact on the claims. So that's most interesting topic. Let's join back once again next fourth Saturday. We are there, so just come and join us. Thank you. Thanks a lot for joining us this afternoon. Thank you.